Welcome to DII Pre-Market Edge Update. I am so thrilled to be your guide through today's explainer, where we're going to break down the absolutely critical market currents shaping June 1st, 2026. Look, while Wall Street was sleeping, Asian traders were wide awake, and they were betting heavily on the next massive wave of AI. We've got a whole lot of ground to cover today, so let's just get right into the setup.
Okay, let's dive into this. We are seeing a really intense contrast out there right now. On one side of the coin, you have this overnight AI-driven euphoria on Wall Street. It pushed the Dow Jones right up near the historic 51,000 mark, and tech giants like Dell just surged. It's creating this highly optimistic risk-on sentiment. But on the flip side, well, the picture just isn't quite that simple. We are facing some serious lingering geopolitical uncertainty over in the Strait of Hormuz, which is sparking crude oil prices. And crucially, the U.S. 10-year yield has crept upward to 4.46%. So essentially, we're doing a tightrope walk here, balancing extreme risk-on tech appetite with these underlying, undeniable macro tensions.
All right, let's move into our first major setup, the institutional money battle, and what we're calling Dalal Street's hidden divergence.
So, the GIFT Nifty has actually been hinting at a positive open, but the real twist here is the looming RBI Monetary Policy Committee meeting and those fresh GDP prints. To really grasp today's highly sensitive setup, we have to look in the rearview mirror for just a second. 1,000. That number represents the severe 1,000-plus point drop the Sensex experienced just in recent trading sessions, bringing it way down near the 74,700 mark, with the Nifty sliding down to the 23,520 zone. Guys, this was a broad-based, absolutely brutal sell-off. Almost every single sector bled out, establishing a baseline of immense broad market panic. But is the whole story really just about panic?
Well, no. Now what's really interesting about this slide is the massive, hidden divergence taking place right under our noses. Look at this. Over 3 straight sessions, foreign institutional investors, the FIIs, have dumped over 21,100 crores worth of equities. That is a seriously heavy sell-off. But on the other hand, domestic institutional investors, our DIIs, aggressively bought the dip. They've accumulated roughly 16,764 crores. So while the headline screens are flashing absolute panic and global disconnect, the smart domestic money is quietly but very aggressively accumulating inside the house.
Which really leads me to ask you directly, are we looking at fear or greed here? Are you just blindly reacting to the headline fear shown by the global sell-off? Or are you actually tracking those hidden greed footprints left by the domestic institutions? Because remember, every single move the market makes today is actively writing the script for next week's policy reaction.
Let's shift gears to our sector watch, where we'll be uncovering the hidden rotations.
We need to uncover what's happening beneath the surface of that brutal headline sell-off. Let's rattle through these. First up, banking is currently under pressure, hitting a stiff resistance zone right between 54,300 and 55,000. Honestly, until that level is decisively broken, the risk-reward completely favors the bears. Auto and metals took a pretty painful 2% hit, showing real stress in those volatile, high-beta pockets. But hey, don't be fooled. The structural EV and localization policies mean the medium-term story is entirely intact. Meanwhile, FMCG is holding a classic defensive posture, just waiting patiently on rural monsoon data and crude directions. And Pharma? Well, backed heavily by a massive 15,000 crore PLI scheme and an API manufacturing push from the government, quality balance sheets in this space are offering tremendous upside scope.
And while all that is happening, there is this totally silent capital buildup occurring in the infrastructure and realty space. Despite the broader market corrections, platforms like Intraday are raising a 500 crore pre-IPO funding round at a 25,000 crore valuation. And listed players? Well, Ajmer Realty is posting record FY26 pre-sales of around 1,700 crores. That is a massive 57% year-over-year jump. This absolutely proves that private capital is still aggressively betting on the Indian growth story, and that underlying urban housing demand, it remains highly, highly resilient.
Next up, let's talk about the AIIT showstopper that is completely defying the broad market red.
Because there is one sector that just totally shrugged off the market bloodbath, 3.2%. While almost every other sector was bleeding out over recent sessions, the Nifty IT index jumped a massive 3.2%, closing out at 29,832. It is showing a very clear, definitive breakout attempt on the charts. It basically stole the spotlight and attracted the smart money rotation that almost everyone else completely missed.
So what exactly is the catalyst behind this huge IT breakout? Well, it boils down to agentic AI workflows. What is that? It's basically full-stack AI automation embedded directly into IT, HR, procurement, and cybersecurity.
The direct trigger here was the expanded partnership between Wipro and ServiceNow, which deeply integrates Wipro intelligence with the ServiceNow AI platform. This fundamental shift toward agentic AI sparked an intraday jump of over 4% for Wipro alone, signaling a much broader, multi-year digital transformation theme that is aggressively capturing domestic capital.
Let's get to the fun part. Section 4. 2 unbeatable conviction picks, giving you some actionable levels. Okay, let's see how all this builds into actionable intelligence. Keep in mind, this is strictly for educational levels orientation to help map out your charts, right? Not financial advice. So, our first conviction pick is Wipro, acting as a tactical short-to-swing play, riding on this agentic AI wave. It's actually forming a really solid base right now after a prolonged correction. For you aggressive traders out there, the accumulation support zone is nestled perfectly between 200 and 202. You want to keep a tight invalidation below that. Now, the first major resistance to watch is that 212 to 218 zone. Conservative traders might want to wait for a daily close above this zone with better than average volume. But if it sustains that momentum, the extended target over the coming weeks stretches all the way up to the 235 to 250 zone. The whole setup here is cautiously bullish, perfectly merging the AI theme with solid base formation.
Now for our sector-focused jaw-dropper play. If your goal is to ride this massive multi-year AI digital transformation theme, looking at the Nifty IT Index or an IT-focused ETF is a phenomenal setup. The immediate first defense support sits firmly at 29,300. As long as that holds, the buyers remain strongly bullish compared to the broader market. Immediate resistance is hovering around 3,500. A definitive break above that level unlocks the whole next leg of IT euphoria. So for portfolio thinkers, using staggered allocations during dips into quality IT names or ETFs could seriously be the smartest way to capture the domestic smart money that's rotating decisively back into tech.
Let's pull it all together now with our key pivot and final takeaway, the RBI reaction setup. Zooming back out to the broader market, let's look at how this perfectly sets the stage for the upcoming RBI reaction. Your crucial magic number for today is 23,750. This is the absolute make or break intraday Nifty pivot. Listen, if the index holds sustainably above 23,750 and the IT sector keeps outperforming, it serves as a massive credibility restoration day for the bulls. It signals a major tilt back towards growth and tech. But if we slip below this pivot and break that 23,500 support, fresh sell-on rise pressure will aggressively return, and that's going to particularly drag down banking and metals. You need to watch this level like a hawk, alongside the Nifty IT relative strength, because together they're going to completely rewrite the script for next week's highly anticipated RBI policy reaction.
Wow, what a totally fascinating setup we have ahead of us today. Keep your eyes absolutely locked on those charts and those crucial pivot levels as you navigate the trading session. Thank you so much for diving into the data with me on this explainer today. This content is for information purpose only, market are subjects to risks. Now, the final question you really have to ask yourself before the bell rings is this: are you perfectly positioned to catch this tech breakout, or are you going to be caught in the undertow of the broader market panic?